Good morning, my dear friends. This accounting paper we were London exams and London Edexcel and Cambridge exam, O-level accounting paper, there is a lesson called ratio analysis. What do you mean by ratio analysis? Interpretation of accounts. Now, interpretation of accounts, it is very important. Children must know that there are formulas and how to calculate. Now, mainly ratios, interpretation of accounts can be divided into two parts. They are profitability ratios and efficiency ratios. Profitability ratios, efficiency ratios, and liquidity ratios. Today, I am going to discuss under this video profitability ratios. What do you mean by profitability ratios? The business organization can get profit. The main motive of a business organization is to maximize the profit. So when you are running a business organization, you should be able to make a profit. If you do not have profit, that business organization no use. So therefore, all business entrepreneurs' main idea is to maximize the profit and minimize the cost. Now, when you are going through the accounting syllabus for London and London exams as well as local exams, local English medium, London Edexcel and Cambridge, both you are coming across this interpretation of accounts. Interpretation of accounts means ratio analysis. Mainly ratio analysis we can discuss under three ratios. So what I am going to discuss under this, number one, this is interpretation of account profitability ratios. Profitability ratios, under that you have gross profit ratio. You know, my dear friends, gross profit means sales minus cost of sales. So sales minus cost of sales equal to gross profit. Sales minus cost of sales equal to gross profit. Gross profit. Why it is called gross means you have to minus more things. It is not a net profit. So sales is the revenue of a business organization. Cost of sales is something like the cost which has occurred. That means the number of value incurred before selling. So cost of sales could be able to obtain this way: sales minus opening stock plus purchases minus closing stock. So opening stock you have to add to purchases, then minus closing stocks, you are getting cost of sales. So that you have to minus from sales. Sales minus this formula, that means opening stock plus purchases, closing stocks, you have to get cost of sales. Now that cost of sales, when you minus from sales, you can get the gross profit. So that is called sales minus cost of sales. Now cost of sales equal to opening stock plus purchases minus closing stocks. Okay, my dear friend, don't confuse your sales. I have put it separately. Sales minus, that is sales minus this part equal to gross profit. Now gross profit ratio, you can get it from following formula. Gross profit divided by sales into 100. Now, when you take an example, you can take sales 100,000. Assume that this is an example, 100,000. Then cost of sales equal to 60,000. So therefore, gross profit equal to 100,000 minus 60,000, 40,000. Right? Now, gross profit ratio you can calculate this way. 40,000 is top. 40,000 divided by 100,000. So this is the formula: gross profit divided by sales into 100. 40,000 divided by 100,000 multiplied by 100 equal to 40%. Now, my dear children, when you do a sum, examiner is expecting something. What do you mean by this 40%? That is, Then you have to give the interpretation. Interpretation means what is the meaning of this 40%. The meaning is the business organization the business has earned $40 gross profit from every $100 sales. The business has earned $40 gross profit from every $100 sales. Okay, my dear friends. Now, gross profit formula is this way. Very important. Every accounting paper, gross profit ratio you are getting. Now, I am going to discuss the second formula. That is the second thing. That is cost of sales. Now, cost of sales that day before I told sales minus GP. Cost of sales ratio can be calculated. Cost of sales divided by sales into 100. Now, you know what do you mean by cost of sales. You know what do you mean by gross profit. So, cost of sales equal to sales minus gross profit. So, therefore, cost of sales ratio, some on papers, they might ask, what do you mean by cost of sales? So, cost of sales ratio, cost of sales divided by sales multiplied by 100. So, we'll assume that this example, when you take an example, sales equal to 50,000, your gross profit equal to 20,000. So, cost of sales equal to sales minus gross profit. The business has earned sales, but this is the way you can get it. Gross profit, cost of sales. Sales minus gross profit equal to 50,000 minus 20,000 equal to 30,000. So therefore, cost of sales ratio is what we got, 30,000 cost of sales divided by sales 50,000 multiplied by 100, that is equal to 60%. So when you are doing the interpretation, every $100 sales, you can tell that $60 incurred as cost of sales. Now the interpretation is here. $60 incurred as cost of sales from every 100 sales. Okay, my dear friends. Now I told gross profit ratio. This is cost of sales ratio. Now the next one is net profit ratio. What do you mean by net profit? Net profit equal to gross profit minus expenses of operating profit. You have more expenses. When you are preparing accounting, they know that when you prepare the income statement, after gross profit, you have to minus some kind of expenses, office and administration expenses, sales and distribution expenses, finance expenses, all these expenses when you minus, you are getting net profit. So these expenses are called operating profit. Now, when I take an example, you can do that this way. Sales equal to 60,000. Sales 60,000. Gross profit equal to PRO, it should be. Gross profit equal to 30,000. So expenses 10,000. So therefore, your net profit you can calculate this way. Gross profit 30,000 minus expenses 20,000 is your net profit. So net profit ratio is 20,000 is your net profit divided by your sales 60,000 into 100. So a percentage 33.33 you have earned as net profit. So how to tell to the examiner? Now most of the business owners, they don't know. The accountant only prepare all these figures. So accountant must tell to the business owner, what do you mean by 33.33? So therefore accountant must tell that the business has earned $33.33 from every $100 sales as net profit. Okay, the interpretation equal to the business has earned $33.33 from every $100 sales. Okay, my dear friend. Now I told so far cost of sales, gross profit ratio, cost of sales, net profit ratio. Now what is these ratios? These are profitability ratios. One more ratio I have to discuss. That is, ROCE, return on capital employed. So when you are doing a business organization, you just do the business organization to maximize the profit. So when you are investing any money, your main idea is to get some return. Return means when you are depositing money to a bank, you are getting interest. When you are doing business organization, when you are getting a business organization, you must earn profit. When you deposit money to a bank, you are getting interest. When you do business, you are getting profit. So when you take some shares from a company, you are getting dividends like that. Return on capital employed. Capital employed in the sense how you are investing some money to get some return. The capital employed. Total capital employed by a business organization equal to capital employed. Okay, my dear friends. Formula equal to operating profit divided by capital employed multiplied by 100. Normally, operating profit means net profit. Normally, business organization operating profit means net profit. Now, I will explain this by this example. 100,000 you have got a sale. Cost of sales 75,000. Gross profit equal to 100,000 minus 75,000, 25,000 gross profit. So expenses business organization given 10,000. Capital employed given 200. So net profit equal to gross profit minus expenses. Now your net profit of the business organization 15,000. So what is the formula for capital employed? ROC formula is operating profit, that means net profit divided by capital employed into 100. Now you got capital operating profit 15,000. Your capital employed is 200,000 multiplied by 100. So you are getting in that way $7.5 percentage. Every $100, your business organization used to get $7.5. Okay, the interpretation means that means what do you mean by this whole? The business organization has earned $7.5 net profit from every $100 capital employed. Okay, the business organization has got $7.5 from every $100 investment, right? So if the owner is not satisfied, he can close down the business organization and he can go home and sleep. Because if he is thinking that my money is investing in the bank is more profitable now, he can close down the business. 7.5 not enough. Every dollars invest. If the bank is giving $10, so it is better to invest in the bank than in doing this business, because the owner is getting only $7.5 from this business organization. So what the hell is doing this business organization without getting any at least 10%? Bank people telling, okay, give me your money every $100, I will give 10%. So this is the meaning of actually on interpretation. Interpretation, actually, you should be able to identify what do you mean by actually my capital, if I employ it $100, I should be able to get how much. So this business organization getting 7.5. Okay, my dear friends, now I have told you gross profit ratio. Then I told you cost of sales ratio. Then I told you net profit ratio. Then I told you return on capital employed. Okay. These all ratios are coming for Edexcel and Cambridge examination for your accounting paper. These formulas, most cases, most probably you will get for the examination formulas with the past papers. Formulas might be given, but when you are coming to the A-level exam, they won't give you formulas. So, okay, my dear friend, then remember, keep in touch all these notes, and you have to do some examples. When I'm doing the next time, I'll give more and more example with some past papers. So therefore, these are the basic things. So when you are doing the past papers next time, I will explain more precisely. So GP ratio, cost of sales, net profit ratio, return on capital employed ratio. Today I have discussed. Okay, my dear friends, if you have any problems, any comments, you can keep one line. You can give my comments line, or you can have your problems. You can write anyway. So until we meet the next video, I'll tell you bye and take care, my dear friends. So we'll meet next time with a nice video. Until then, take care. Thank you very much.